BFM 89.9, the business station.
Good morning, Jameel. So the referendum polls have now just closed. What was it on the ground? Do you think that the vote's going to move towards Remain rather than a Brexit?
Good morning, guys. Now, this is where it gets interesting because the preliminary polls and the feeling on the ground, well, basically following the bookmakers, and this is what the markets have been doing, they appear to be very confident over a UK Remain outcome. But these preliminary polls that are coming through, and even as I'm watching the Bloomberg TV channel right now, it suggests that the vote is going to be very close. And we have seen some swings on the British pound over the past hour. Honestly, it's swinging a bit like a monkey up and down the charts. It seems to have stabilized a little bit over the past 20 minutes.
So the pound is now climbing above $1.5, so $1.50 for the first time since December. Do you think that the pound will continue to increase as the vote becomes clearer?
We've seen a dramatic rebound in the British pound over the past couple of trading days. I think the British pound's moved from 140 all the way to 150 over just the past week. Basically, if a UK Remain outcome is confirmed, this would be seen as supportive for the British currency. But having said that, the rally does look a little bit exhausted, and I would say that I can't personally see the British pound moving any higher than 151 at this point in time. I think a UK Remain outcome would be more positive for the equity markets and global economic sentiment over anything else right now.
So speaking about global equity markets, which markets do you think is going to see the most dramatic change? Is it in the UK market? Is it in European equities market or the US?
Another interesting question. I think basically the FTSE 100 would definitely see some support from the UK Remain outcome. This would particularly be in banking stocks, the financial sector. London's one of the major financial hubs of the world. But having said that, the London Stock Exchange is currently closed, and it will not be open to around 8 a.m. tomorrow morning. What will be open in the next couple of hours is the Asian trading session. So we should see some movement in major equities such as the Hang Seng Index, Shanghai Composite Index, and the Japanese markets.
So speaking about the Japanese markets, we saw that the yen actually slid following the polls suggesting that the UK will stay in the EU. In fact, Swiss franc also declined alongside the yen. Why do you think this is the case?
This is a fascinating thing to point out because basically what we are seeing is what hasn't been priced into the markets quite yet is the risk appetite. And when there is some increased risk in the markets or confidence over the global economy and its sentiment, you see pressure on the safe haven assets such as the Swiss franc, the Japanese yen, even gold has declined over the previous day or so. I think basically if a UK Remain outcome is confirmed, we could see some support to the global equity markets. I think that the British pound has mostly done its momentum for now. However, we could also see some opportunities in the safe haven currencies such as the Japanese yen.
So non-traditional safe haven currencies like the Australian dollar and the New Zealand dollars actually maintained their recent gains following the close in the polls in the UK. Do you think that these currencies will now see some support following the Brexit vote?
You know, the interesting thing is that when there is some increased risk in the market or increased risk appetite, these currencies such as the New Zealand dollar or the Australian dollar do see some support. Generally speaking, they haven't correlated with huge movements or mirrored huge movements with speculation over a UK Remain or exit outcome. But in the eventuality or the hypothetical situation that the UK will be confirmed as remaining in the European Union, we might see a little bit more further demand for these currencies, but I think most of the action will be elsewhere, particularly the equity markets and probably the Japanese yen.
Moving back to the markets right now, there's a lot of statements coming in saying that the markets are believing that a Remain vote will trump over at the end of the day. Do you think that risk will remain, that these investors are now proven that it's believing to be a Remain vote?
This is going to be very interesting to monitor. I think that it's possible that there will be some increased sentiment and positivity in the markets if the UK is confirmed as Remain in the European Union. I think it would provide some much-needed risk and some attraction towards riskier assets, so this would be positive overall for the global equity markets.
Do you think that the commodities movement is going to change a lot?
What I would say is commodities such as gold is going to move in a safe haven asset would see some decline in momentum. What I would say is interesting to point out is that any increased confidence over the global economy could install some additional demand when it comes to support for oil. So it wouldn't surprise me if the price of oil was attempting to rebound at the moment. And I've just seen over the past couple of hours it has moved over by about $1.
Barclays Bank actually has limited currency trading ahead of the Brexit result. Do you think that banks in general will now limit currency trading going forward?
Not necessarily. I think that there has been concerns that there would be a lot of volatility in the markets, and there could be some concerns when it comes to protecting traders' equities. So it was expected that brokers and banks would change some of their requirements over this coming week. I've seen it with a lot of different brokers as well, not just banks. Once this uncertainty and this final saga over whether there'll be a Brexit or not comes to a conclusion, we'll probably see business return to normal at some points.
Going back to the campaign prior to this election or referendum, which campaign do you think had a greater impact? Which one had a more impressive last-minute push?
Now, this is an interesting thing to point out. Look, the preliminary polls are suggesting the vote's going to be very close, and I'm going to move away from the bookmakers for a moment. So you would have to say that there then has been some unexpected support for the Leave campaign, because economically and business speaking, it makes absolutely no sense at all for the UK to leave. Having said that, we've seen a lot of headlines, a lot of support for the Remain camp over the past month. Maybe a few worries were awoken, and the Remain seems to have trumped over the past couple of days. I mean, I think there's been a lot of support since David Beckham made the public statement.
Speaking about David Beckham, do you think that the British folk, the guy on the street, see this referendum as a major thing in their lives, or do you think that this is another Thursday for them?
When the referendum was originally called to be for the 23rd of June, probably some of the general guys on the street did not quite realize what this would mean. But over the past couple of weeks, headlines have literally censured left, right, and center around the referendum, so I think they're probably a lot more in tune now. But yes, since David Beckham made his statement about Manchester United players and been a successful team for the European Union, there's been a lot more interest in this vote.
Finally, Jameel, what are your general thoughts following this? Do you think this is going to be a start of a good beginning for the UK and the EU?
Basically, economically and from a business standpoint, it makes absolutely no sense at all for the UK to leave. So I think it would be positive for everybody if there is a Remain outcome. With that being said, I do not see that much further movement in the British pound in terms of support. All the risks are still to the downside, because regardless of a UK Remain, economic data throughout 2016 has pointed out to UK growth slowing, and this is what investors will begin to think on. At the same time, European economy is not going to make too much of a difference in the short term. Economic data is still struggling.
Thank you. That was Jameel Ahmad, Vice President of Corporate Development and Market Research at FXTM.